Prepare and Diversify with Gold and Silver with Monex Vice President Mike Maroney, along with Managing Partner of CPM Group and author of the Monex Precious Metals Market Outlook Report, Jeffrey Christian.
Good afternoon. It's Tuesday, May 15th. My name is Mike Maroney, and we are coming today from the Monex Precious Metals studio. We're doing our video series, Prepare and Diversify with Gold and Silver, with Jeffrey Christian, the Managing Director of the CPM Group. Jeffrey shares with us information each month that hopefully our clients and our prospects utilize to potentially position them in the markets, because he's given us phenomenal information over the last 2 years to share with our customers. Jeffrey, how are you today? And wow, great, very interesting day in the markets as the retail sales numbers came out positive, but the market's kind of doing exactly what you thought it would. We saw the bump up last week, and we're getting the sell-off today as gold is broken below the 200-day moving average and key support at 1,300. What's next, Jeffrey?
I think that we're starting to enter into the summer slow period. I think the sell-off today was probably triggered by the strong retail sales and other, you had some strong economic indicators coming out of the United States. You had some weak economic indicators coming out of China and Germany. That pushed the dollar up in the morning, and it pushed stocks and precious metals and copper down. I think that investors were looking at this and saying, okay, maybe this puts a little bit more upward pressure on interest rates. But I think that was the occasion for today's sell-off. But the broader cause for the sell-off is that we're moving into this sort of quiet period that we tend to see in the summertime. And we think that we're moving into that, and we're looking for the price to trade between $1,280 on the low side for gold and $1,340, $1,370 on the high side. I don't think that's going to change for a couple months.
Interesting enough, because if you look at what gold did today, we hit a low of $1,288, and obviously the retail sales numbers were strong, up 0.3%. But they were expected to come in up 0.4%. And if you look at the previous month, it was up 0.6%. So really, if you think about it, we're actually seeing a drop in retail sales in comparison to the month previous. And as far as the Fed is concerned, we also saw the yield on the 10-year break above its multi-year high at 3.03%. What's your take on that, and do you consider this to be just the beginning as far as the 10-year yield is concerned, as far as a breakout is concerned?
I do think that the 10-year yield will go up, and I think that we might see 3.25%, 3.5% by the end of the year, which is not catastrophic to the economy. Our view is that the Fed probably will adhere to its guidelines. It had said 3 interest rate hikes this year, which means 2 more in the second half of this year. There's increased speculation that they might increase the interest rate 3 times. We don't think they'll do that. We have been talking about the idea that the economy, while it's looking strong, is slowing down and is moving into a period where, we're 9-10 years into an economic recovery and expansion now. This is a mature recovery. So our expectation has been that we will move to a period of slower growth and possibly a recession at some point over the next year or so. And that is still our expectation. So we're looking for slower growth, not only in the United States, but also in Europe and in China. And we're sort of steady as she goes as far as our expectations, both the economy and the gold and silver prices go.
Now, Jeffrey, you've been spot on. If I'm not mistaken, the last time we spoke, you felt that potentially we could put in a short-term high in the first couple weeks of May, and then we would sell off and get down as low as $1,285 in gold. Lo and behold, we're down $30 today, so it's happening fairly quick. But one thing you did point out the last time we spoke is that you felt that we were going to see some geopolitical issues as far as the midterm election is concerned. Are you still looking at that as a possible catalyst to reignite gold's upside move?
Yes, I think the midterm elections are going to be very important to investor attitudes toward the U.S. economy. I have spent 2 of the last 3 weeks in China, and the Chinese are extremely concerned about the course of U.S. policy, not so much because of the sanctions, but because of the unpredictability of it all. But you don't have to be Chinese to be confused by what's going on in Washington right now. And our expectation is twofold in terms of the midterm elections. First off, if the Democrats take the House, you're going to have an even more hostile Congress toward Trump. You probably will have talk about impeachment hearings. You'll have all sorts of investigations and all sorts of things that he's going to be doing. And insofar as the Congress has been pretty ineffectual for the last 16 years already, it'll get just that much more ineffectual. But the other thing to pay attention to in July and August and September and October is that if the Republicans in Congress decide that they should try to keep their jobs, they may try to become democratic, if you will, and they may try to start criticizing Trump more in order to try to curry the favor of moderate Republicans in the election. And so you don't necessarily have to see the Democrats regain the House, and you don't necessarily have to wait until January when the new Congress is sworn in to see the advent of a more hostile, more stalemated government in Washington. It could come as early as August, September, October if the Republicans try to save their own jobs by criticizing him more.
Okay, so here we've had the classic pullback that you were expecting, gold trading somewhere in the 1280s. I'm not sure if you think that silver inevitably will break under that support line right around $16, but we may see silver somewhere in the 15s if we're fortunate enough. And basically, I think what I'm hearing is now may be a good time to buy and wait instead of waiting to buy as far as the precious metals market.
I think the summer months are the time to accumulate. In terms of silver, we're looking at 16 and then 1570 below it. I think there is a possibility that we could see a spike down to 1570 over the course of the summer. I think that's a screaming buy level. From a longer term perspective, 1625 are good levels to buy because we think that a year from now you'll see much higher prices, and then 3 years from now you'll see even higher prices. In terms of gold, we've been saying that we thought that the price could test 1280 over the course of the summer, and it looks like it's going to be testing that. I'm not sure that it breaks below 1280, so I think that these are very good accumulation periods. And for an investor who's looking, 12 months down the road or 12 years down the road, I think that these are extremely attractive prices at which to accumulate holdings.
So here we have geopolitical uncertainty. We have political uncertainty here in the U.S. We have debt issues throughout the world. And obviously, it's going to be very interesting what happens over in Europe. We have the Italian elections coming up. So your projections as far as what sits out on the horizon is still long-term bullish. So this sell-off, this correction, could just be one of those incredible long-term opportunities as far as customers that are looking to get in precious metals as a good time to buy. Am I on the same page with you, Jeffrey?
That's a very succinct summary of our view for investors, yes.
Jeff, it's always a pleasure speaking with you. You've been phenomenal as far as the information is concerned. Obviously, one of the most knowledgeable individuals in the precious metals markets in the world today. Thank you for your time and look forward to speaking with you again next month.
It's always a pleasure. Thanks.
Okay, take care, Jeff.